Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be asking a question here, and that is, has Bitcoin hit the last target before the big takeoff in the final phase of the bull market? We'll have a look at the wider markets in terms of what they're telling us, and we'll also have a look at the 60-day cycle with Bitcoin and see exactly where we are in that cycle and where it might end. And I'll also be doing a reminder of our strategy here. For those people who are here for the long term, for the duration of the 4-year cycle, I'm just going to give you my insight for our journey from where we are to the end of the bull market. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. And before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, so for those of you who didn't watch the Monday's video, our target was that in the previous cycles, the last 3 cycles, Bitcoin has done the same thing over and over again. And that is that after bottoming out in a bear market, it tends to come up to the red line, find support on the green line before the takeoff to the parabolic move to the end of the bull market. In the second cycle, it repeated one more time, end of the bear market, up to the red line, support on the green line, and before the parabolic move to the end of the bull market. And in the last cycle, between 2017 and 2021, end of the bear market here, up to the red line, support on the green line before the parabolic move to the end of that bull market. And as mentioned on Monday, this is what we were waiting for. We bottomed out at 15,400, came up to our target of the red line, support on the green line, and the question is this the last and final target before we have the big takeoff to the end of the bull market? So what I'm going to do is I'm going to do a bit of analysis here to see exactly where we are, how we have hit the target, and how far lower it may still have to go. And this is what I was referring to in the Monday's video, that once we've hit the red line here, as part of the various stages that the 4-year cycle goes through, it was inevitable it was going to come back down to the green part of the pi cycle. And I know many of you ask about the settings of the pi cycle. All you have to do is go to the indicators here, type in pi cycle, and the one I use is this top one here called Pi Cycle Bitcoin Top Indicator. It's by Bilzerian Candle. And these are the settings, inputs, and the style. So now that we've come and hit our final target on the green line, does that mean that Bitcoin price will now take off from here? And the answer lies in the previous cycles, that once it has met the green line target, we still may have further to go. And the question is, where will it find some support before this big takeoff to the upside? If we analyze the current price action on the daily chart, we can see quite clearly we have a strong support line here, and we had it there one more time, and we've now just broken through it. And once we break these types of support lines, we have to look for the next lot down here. And while we've got this support at the 57,000, which we mentioned in the Monday's video, and it's exactly where it's been hovering around now for the last 2.5 days. But if you look left here, it's giving you a little bit of a clue, and that is that from this point here at 52,000, or this cluster between 50 and 52,000, there was only 1, 2, 3 days before we came up to this support line here at 60,000. So what this tells me, there isn't very much price action. So just as fast as it went up there, I don't think it's going to take too much time to go back to these levels, because this is where a lot of the price action was at that point. So the 50 to 52,000 is a natural place for us to bounce back from. And I'll have a look at the wider markets to see if that is also what the narrative is. So we need to look at the bigger picture and build up a narrative of what the most likely probable outcome is over the next few weeks. And if we do a Fibonacci retracement from this point here, which was the last support and resistance point, to the top here at 74,000, you can see quite clearly it's come back to the golden pocket of the 61.8 and 65% Fibonacci levels, exactly at that point where the green line was. And obviously many times Bitcoin overstretches that and goes to the 78.6, which is at 54,000. So this would be another place where you might see a little bit of support on its way down to these levels at 50 to 52. So these are the real levels now. My judgment call on this would be that with a 60-40% probability, we're going to come back down, at least down to the 78.6, and more likely down to the 50-52, where we're going to find very good strong support and it's a place where it could consolidate, create some sort of a market structure here before we have this big takeoff over the next few months. So a lot of people talking about the ETFs and why the ETF flows has dried up. So as we can see with the BlackRock Bitcoin ETF, we saw a lot of record inflows since January the 11th, but in the last 5 or 6 days, we've now started to see the first outflows until the market bottoms out. So the psychology is very simple. If you see the price going up like this, you're more likely to buy into the ETFs. But as soon as you see this happening, to the downside, you're going to stop buying, hoping for a lower price. So until we see this consolidation down here, that's when you'll see the pickup for the ETFs one more time. And as you can see, this narrative has also played out in the Hong Kong Bitcoin ETFs that started a few days ago. Unfortunately, the ETFs in Hong Kong have timed it really badly. So the price, instead of going up when the Bitcoin ETF started in the USA, they came out a few days ago when the price for Bitcoin had been falling. So unfortunately, they've been quite disappointing so far. But once again, once the price bottoms out, I think you'll see a better, more realistic picture developing of the real demand in the Hong Kong Bitcoin ETFs. So if we can try and build up a picture of exactly what's happening in the various sectors of the money markets here, we can start off with the SPX, and we can see quite clearly, having met our first support target here, and now finding support around that level one more time, we seem to be in an ABC correction here. So the next target seems to be around the 4900. And we can see that with the Gravestone Doji candle forming at this point. So the bears are very much in control. There's a very high pressure to the downside. So you can see there's a rejection of higher prices with this candle. So the likelihood is that we go to the next level at 49. And the Russell 2000 is showing exactly the same thing, a Gravestone Doji candle on an ABC correction going on here. So the next level is going to be at this point at around about the 1890, 1900 level. And moving on to gold, and as mentioned over the last few weeks, once we got this Gravestone Doji candle here, the pressure was always going to be to the downside. And I would expect this to continue by looking at the Fibonacci retracement level here, from the bottom here to the top. There's a very high propensity to come back to the 2250 level from the 2300 level currently. So this is where I would expect gold to be finding some sort of support at the 2250, and we'll cover that in next week's video to see where it's gone down to. And if we move on to silver, similar picture developing one more time, Gravestone Doji candle, pressure to the downside, and as mentioned on Monday and in the last week's video, this is the level where we're going to find support around about the 26 level. So everything playing out as according to our expectation that we've been looking at by looking at these wider markets and building up a narrative of exactly where markets are going. And the dollar certainly showing quite a lot of strength here. But as we can see with these indecision candles, some uncertainty coming into the dollar chart. But we really need to break this green line to see a firmer picture of the dollar coming back down. So that's what we're waiting for, is trying to decide which way to go, to the downside or the upside. And if we have a look at the Bitcoin 60-day cycle, it tells us some sort of a direction of the trajectory of the wider markets as well. So in Monday's video, we were waiting for some sort of a clarification from the start of this cycle here at this point. And that low was at 60,760. And any close below that on the daily chart would have been a failed cycle. And it tried to find support there, as you can see, at exactly that level. But we obviously yesterday closed below that. So now we have a 60-day failed cycle. And what we've now got from where we are to the end of the cycle, expected to be around 19th of May, we've still got about 17 more days where we could quite easily see further run down. So this would tell us, this is giving a very good clue as to where the price for Bitcoin is going. So between now and the 19th of May, so that's about 17 days, just over 2 weeks, it looks like with a high degree of probability that this cluster of prices here is where we're going to find most of the support. So once again, all roads seem to be leading to the 52,000. And if they don't do that, and we've always got to look at the alternative possibilities, so while there's a 60-40 chance of it coming back down to the 50-52, if it starts to move like this, into the 60-day cycle low here, that would be incredibly bullish. That would be telling us that there's a lot of big upside to come around this time period in the middle of May. So let's see where that gets to. But certainly, when you look at the overall picture, everything seems to be leading to the point where Bitcoin seems to be wanting to go down to the 50-52 mark. And finally, having a look at the RSI and the stochastic RSI, once again, seems to be pointing to a further consolidation to the downside. So what we've got with the RSI is just entered below the 30 level here, and it's going to take a little bit of time for it to consolidate before it comes back up again. So it could be a couple of weeks before it does that. And on the stochastic RSI, the momentum, as you can see, is quite low, and just like over here, it takes a little bit of consolidation before we start moving back up above the 20 level here. So once we've had a look at all the wider markets, you can see that the central theme building up around the Bitcoin price is that for the next week to 2 weeks, what we've really got is a consolidation or to the downside. This is the region we're really aiming for over the next couple of weeks. Let's see how it plays out. And we've always got to be dictated by the price action of Bitcoin. And I know that with so much noise out there from the economy's point of view, like yesterday, the interest rates were kept on hold, and there's the uncertainty whether the Fed is going to be increasing the interest rates rather than reducing the interest rates, which was what was expected only a few months ago. The whole picture seems to get very confusing. So what I want to do is I just want to put all that in focus by bringing us back to the overall 4-year cycle, and that is quite simply a quick reminder to everybody, especially if you're following the 4-year cycles, which I am. And when I zoom out over the 15 years of the Bitcoin history, the whole strategy becomes very simplified and much more realistic and relevant when you look at these cycles. So if we go back in history to a mutual point, like the previous all-time high, this is where we are currently, that the previous all-time high of the 69,000. So this is where we've been. So if you go to a mutual point like this in history, we can see what is to follow, because this is exactly what's followed in the past cycles. And as we've seen with the pi cycle, the structure of the charts seem to play out over and over again. And if that is the case, then what we can expect is that from the previous all-time high over here, then we are in this phase of the 4-year cycle. So this would suggest we're only a few months away to the end of the bull market. And in the second cycle, from the previous all-time high here, exactly the same here. Then the last cycle, from the 20,000 previous all-time high, this is exactly where we were. And now, despite the short-term correction, by looking at the past 3 cycles, it would suggest very strongly to me anyway, and if you want to capture all of this move at this point, then it does not pay to get out of the market. And it is just my opinion, and everybody's got to do what they need to do. It's your money. You need to do what you want to do with your money. But my narrative is that it's much more riskier to be out of the market despite the correction than being in the market. And on that final note, I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. And if you've got any comments, questions, or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.